back, students, to Accounting 1329, Payroll and Business Tax Accounting. This is Dr. Mercado speaking. I hope all of you are having a great day. We are going to continue covering Chapter 5, which deals with unemployment compensation. Please make sure that you have read the chapter before you attempt any of your assignments, okay? Now, the problem that I'm going to go over with you today is problem 5-12A, okay? The problem reads as follows. The following unemployment tax rate schedule is in effect for the calendar year 2022 in State A, which uses the reserve ratio formula in determining employer contributions. They provide us with the reserve ratio percentage thresholds. We have different tiers and the contribution rates, each rate specific to the specific tier. Okay. It says Iram Company, which is located in State A, had an average annual payroll of $850,000 for the 3-month periods ending on June the 30th, the computation day for the tax year of 2022. As of June the 30th, the total contributions that had been made to Iram Company's reserve account in excess of the benefits charged amounted to $17,440. And then we have to compute 4 requirements, okay? And we're going to go through one of each separately. Now, we need to understand what these $17,440 mean, okay? Now, every company is responsible to pay state unemployment tax based on a variety of factors. The contribution rate is calculated, okay? Of course, the higher number of people that are sent to the unemployment office or they collect unemployment on behalf of the company causes an impact on the contribution rate, okay? So, companies or businesses have an option to contribute more than what is required. So yes, you have to pay a certain percentage. And then, some companies decide to, you know what, we're going to put a little bit more. I want to call it into a bucket, okay? So we have a bucket and we put money, the state contribution, the state unemployment contributions are put into that bucket. And then if your employees file for unemployment, then the money is pulled out of the bucket and the bucket is emptied out, right? So adjustments are made every year depending on the amount of utilization of those funds, okay? Now, some companies decide to put extra into that bucket, okay? They have an excess, a reserve account. In case we need more, we already have the money in there. So this company has put in excess of what is already required of them. They've put in an excess of $17,440. Okay? So, the first requirement that they're asking us to do is letter A, which is Iram's company's reserve ratio for 2021. We have to calculate the reserve ratio for 2021. Okay? Now, in your textbook, there's a section that talks about experience rating. Okay, it basically states that the concept of the experience rating is based upon the payment of state unemployment taxes according to the employer's stability of employment. As an employer experiences a lower employee turnover, generally the state unemployment tax rate will be lower, okay, which makes sense. The less people that are unemployed, the less taxes you pay, okay? In all states, some type of experience rating plan provides for a reduction in the employer's tax contributions based on the employer's experience with the risk of unemployment. Of the several formulas used to determine the contribution rates, the most commonly used is the reserve ratio. Okay, so the reserve ratio is the contribution less the benefits paid over the average payroll. Okay, so in this case, they're asking us to calculate the reserve ratio for 2021. We've got the amount of the contributions in excess of what we are required to pay, okay, over the average payroll, okay? We don't have the information for the benefits paid, and in this particular problem, they're basically telling us that we contributed what was required of us. And then on top of that, we have the additional contribution of $17,440, okay? So to calculate the company's reserve ratio for 2021, I'm going to go ahead and I'm going to get the $17,440, which is the excess in contributions that we had, divided by our annual payroll, our average annual payroll of $850,000. Okay, let me get my calculator out. So it's $17,440 divided by the average payroll of $850,000. That gives me that decimal. Okay, I want this in percentage because this is the reserve ratio and ratios are in percentage. Okay, so I'm going to go ahead and I'm going to multiply by 100 to get my percentage, and that's going to give me 2.05. Okay, 2.05 is my reserve ratio for 2021. Okay, so we got the excess paid. So we put 17,440 in excess of the benefits charged divided by our average annual payroll, and that gives us our reserve ratio, okay, of 2.05. That is what we have in reserve. That is the extra that we have in our account in case we have any additional unemployments and any other layoffs or whatever the case might be. Okay, so that's 2.05. That is requirement A. Requirement B, we have to figure out the 2022 contribution rate for the company. Okay, now in order for us to be able to do this, we have to first calculate A. What we're going to do is we're going to locate this rate, which is 2.05, in the tiers. Okay, so that falls between right here. Okay, that falls between 2% or more, but less than 2.2%. My contribution rate is going to be 4.9%. So in this particular case, we don't have to do any calculations. It's just locating the information, the reserve ratio in the tiers provided, and then locating our contribution rate based on that tier. So we're looking at a contribution rate of 4.9%. Okay. So based on my reserve ratio of 2.05, my contribution rate for the company is going to be 4.9%. Okay, that is how much I'm going to be putting into my state unemployment tax. Okay. Now, C is a little bit complicated. Okay. C states, what is the smallest contribution that the company can make in order to reduce its tax rate if state A permits voluntary contributions? So if we are wanting to decrease our contribution rate by the smallest amount, which would be the next tier, okay, what would be the amount can make smallest contribution? What is the smallest contribution that the company can make in order to be able to achieve this? Okay, so in order for us to be able to move down to the following tier, which is the 4.6% tier, okay, the lowest, what is this? The smallest contribution that the company can make in order to reduce its tax rate if state A permits voluntary contributions. So if we want to move down to that 4.9 tier, okay, we would have to have a reserve of 2.0 or more, but less than 2.2%. So we would need to maintain a balance. Let me do the calculation here. We're still going to look at the 850,000 average annual payroll. Okay, but now I'm going to go ahead and I'm going to multiply it by that reserve ratio, that highest reserve ratio that they have here, which is at 2.2%. That's the following tier. That is a tier that would allow us to the smallest contribution, to reduce our contribution by the smallest amount, because that's the tier that follows below. Okay, so if we want to go from paying 4.9 to paying 4.6, we're going to get the amount, the average annual payroll, times that 2.2% right there, and then we'll see what that gives us. Let's see. Let me get my calculator. 850,000 times 2.2%. That gives me $18,700. Okay, so I'm going to get the 18,700, okay, and then I'm going to go ahead. This is going to be, let me put here a little description, okay. This is the balance needed to qualify for the 4.6% rate, okay. So in order to qualify for that next tier below, which would be to pay 4.6%, the balance needed would be the 18,700, the 850 times the 2.2% right here. The 2.2% right here. Okay, so I was looking at the wrong tier, but okay, let me explain this again. Okay, so we are currently in this tier right here, 2% or more, but less than 2.2%. So we are paying less taxes. Of course, our reserve ratio calculation is 2.05, so it's in between these numbers. Currently, we are paying 4.9%. They're asking us, what is the smallest contribution that we can make? Well, the smallest contribution that we can make is, let me figure out right here, is that 2.2%. Okay. If I want to jump from the 4.9 tier to the 4.6 tier, I have to pitch in 2.2%. Now, students get confused because over here it says 2.2%. It's not 2.2%, it's less than 2.2%. We would need to pay 2.2% or more to fall under the following tier, which would be 4.6%. So in order for us to be able to qualify for that 4.6 tier, the smallest contribution that we would need to make would be to multiply by that 2.2% figure, which is what we did here. Okay. Now, I'm going to go ahead and I'm going to subtract. I'm going to subtract the actual balance. How much money do we have on our reserve account? We have $17,440. According to the problem, that is how much money we have in the reserve account right here. Okay, we have $17,440 on our reserve account. So I'm going to subtract that. So that means that the contribution needed to be able to jump from the 4.9 to the 4.6 would be, I'm going to get the 18,700 minus my 17,440. That would give me $1,260. I would need to contribute an additional $1,260 into my reserve account to be able to go from paying 4.9% to paying 4.6%. Now you're going to ask yourself, is it worth it? Is it worth me putting in an extra $1,260 to go from paying 4.9% to 4.6%? Okay, and we're going to figure that out in requirement D. In requirement C, all we're figuring out is how much extra do I need to contribute to jump from tier 4.9 to tier 4.6. If I jump from 4.9 to 4.6 using the smallest contribution that can occur, it would be paying at 2.2%. I would end up paying $18,700. Right now, I currently have in my reserve account $17,440. So that means that I would need to put in an extra $1,260. Now, letter D. Tax savings realized by the company, taking into consideration the voluntary contribution made in letter C. If the taxable payroll in 2022 is $980,000. So now we are going to assume that in 2022, my average annual payroll is $980,000. Okay. I am also going to assume that I have taken into consideration the contribution needed to jump from the 4.9 to the 4.6 tier. Okay. So let's start our calculation. The first thing we have is our tax without our voluntary contribution. Okay. If we don't put in that extra money into our reserve account, this is what we would pay. We would pay the $980,000 times the 4.9%. Okay. This is assuming that we're still in that tier, that current tier of 4.9%. If we stay in that tier, how much would we pay? Well, we made $980,000. I'm going to multiply it by 4.9%. That means that we would pay $48,020. Okay, $48,020. So that would be the amount that we are liable for. That would be our tax without the voluntary contribution. Okay. if we were to put in the extra 1,260, so we could move from that 4.9 tier down to the 4.6 tier, then we would have the tax with the voluntary contribution. And then that would be 980,000 times 4.6%. That would be our adjusted rate. We would adjust it down. Okay. Right here, we're looking at that 4.6%. So if we do that extra contribution of 1,260, that would bring us down one tier and we would be paying 4.6%. Now let's see what that gives us. So it's 980 times 4.6%. That would give me 45,080. Okay. Okay. So that would give us a tax decrease resulting from the voluntary contribution. Okay. The 48,020 minus the 45,080, we would have a tax decrease of 2,940. Okay, our taxes would decrease. Why? Because our contribution rate went from 4.9 to 4.6. Okay. Now I'm going to subtract the amount of the voluntary contribution. Okay, we had to put some money in there to decrease our rate. Okay, we had to put in there 1260. Okay, so I'm gonna subtract my 1260. Okay, that is the amount that I had to put in, that extra contribution needed. I'm gonna deduct that from my tax decrease, so I can actually get my tax savings realized. Okay, I'm going to get my 2,940 minus my 1,260, and that's going to give me 1,680. That is my actual tax savings after I put into my reserve account an extra $1,260. So by me contributing an extra $1,260 into my reserve account, my contribution rate decreased from 4.9 to 4.6. So if I were not to have made that extra contribution, I would have been looking at paying $48,020 in taxes. If I paid that extra 1,260, that would move me down one tier, and then that means that I would be saving, okay, I would be paying in taxes 45,080 because now my new contribution rate is 4.6%. I would subtract those two numbers to be able to figure out the decrease resulting from the voluntary contribution. So I would be saving, okay, a decrease of $2,940 in taxes because my contribution rate went from 4.9 to 4.6. Now, in order for that to happen, I had to pay an extra $1,260 into my reserve account. Okay, I'm going to deduct that amount of my voluntary contribution of 1,260. If I get my tax decrease of 2,940 less the amount of the voluntary contribution, I still have tax savings realized of $1,680. Not only am I paying a smaller contribution rate, not only am I putting more into my reserve account, I'm actually saving in taxes. So it's a pretty good investment. If the company or if the state that you are in allows for those extra contributions, maybe this is an analysis that you would want to perform to be able to say, okay, what would happen if we contribute, X percentage based on our reserve ratio, okay? What impact would that have on our contribution rate, and what tax savings will we, the organization, realize based on that additional contribution into our reserve account, okay? So these are the 4 requirements that we have for this specific problem. Please be very careful to read the instructions. Make sure that you highlight the correct tier that you should be looking at. And make sure that you read your problem. There's some examples included in your text that deals with reserve ratio and contribution rates. Make sure that you read all of that information. And make sure that you work on your homework during the week. Do not leave the completion of your homework assignments for the last day. That way, if you have any questions, concerns, you can reach out to me during my scheduled office hours, or you can send me a message during the week and I can respond timely. Remember, if you send me messages on the weekend, I do not guarantee I will respond. Okay? So that is it for this particular lecture. Until next time, have a wonderful day. Bye bye.